I see these keywords here. Strong dollar, weaker yuan, drag down gold. I'm like, okay, all right. I see keywords. I see strong dollar. That's been a theme that's been pushed over the last several weeks, months. And we know why, right? Because they took profits on long positions, which caused price to drop. So they're really pushing this strong dollar. So they use those words, strong dollar, and then down gold. Okay, those are the key words that I'm looking at, right? When I see this, that's what I'm thinking about. I'm thinking about strong dollar. That's been your key player, and down gold. Those words. Because there has to be an explanation as to why gold dropped. Remember how I said they're always going to come up with an explanation? So you read the article and it's like, okay, you're saying that gold futures have sagged for several months and investors often like to cast blame on higher interest rates. So you're going to see this theme all the time, right? Blame the interest rates as to why gold is reacting the way it is. And tell everybody what investors do. You know, it's like you read articles, and over the last couple of years, there's been several things that have happened in my country, Canada. And it's amazing when, you go out and you attend rallies and you hear what Canadian citizens have to say. I speak to a lot of fellow Canadians, a lot of friends, family members, and I get a consensus as to what they feel about current events. And it's funny, you read the newspapers that are, being offered multi-millions of dollars by our government, and then you read the headlines and they say Canadians feel this and this and this and that. Canadians believe that this and this and this and that. It's like they're trying to tell you what Canadian people think. They're trying to make you think that Canadians feel this way because they know typically people want to do what other people want to do. They do what the consensus is, right? If there's a fork in the road, everybody's going to the right, you're going to probably go to the right because you're going to think there's probably things that people know about that road to the left that I don't know. So I'm just going to bet on this being the right one because everybody else is taking that road. So whenever I read an article and I see this type of wording in the article, I already know that they're trying to make you believe a certain thing. Okay? It's very, very smart. You see it all the time, right? So gold futures have sagged for several months, and investors often like to cast blame on higher interest rates. Really? Investors like to cast blame? Maybe there are people that do that. I like to cast blame on the fact that institutions had a massive long position and they used a war to offload the position. Because typically investors believe, and why did they believe it? For many reasons, that in times of war, gold is a good investment. So knowing that, that was considered to be a perfect opportunity to offload such a large position in gold. Do I know this for a fact? Yes, I know it for a fact. I don't have to speculate on that. I know it for a fact because I've studied the positions. I've looked at it. I've presented the information to you. Okay? It's a process, right? I get emails all the time. Kevin, I want to learn how to read the COT report. How do I do that? Can I just become, uh, a basic member with the school, have access to the reports? Yeah, you can. You read the reports and you see the reasons why we do what we do. But if you want to become a full-fledged trader and understand the reports, it's about building up your logic, right? It's about watching the analysis that we do and what we do in our class. How do we discover the things that we discover? It's about building up that logic and that knowledge base. So I know for a fact that the banks lured retail traders into taking off their positions because of the war. I know that for a fact because I could see the proof. I see the proof. I see the positions change. I see the structures being built. I know what's a poor structure, what's not a poor structure. And I know what it means when the banks create those structures. So I know these things for a fact. I'm not guessing. I know it for a fact. So I'm reading this article and I'm like, yeah, wonderful. Blame it on interest rates. Has nothing to do with interest rates, although many people would think that's the case. Okay. Okay, so blame it on the higher interest. So gold futures have many risk-averse investors who might buy gold are instead buying U.S. Treasuries since those yields have risen this year as the Federal Reserve has raised interest rates. Okay. According to Goldman Sachs, I love this guy. He's the best. According to Goldman Sachs chief commodities strategist Jeff Curry, and then you go over and do a little bit of investigating to find out who Jeff Curry is. Jeff Curry is an economist and the global head of commodities research in the global investment research division at Goldman Sachs. He rose to prominence during the 2000s by forecasting the commodity supercycle and oil spiking above $100 a barrel. He has been labeled a maverick for making bold calls that pack a punch. During the 2010s, he was known for forecasting oil prices to stay lower for longer to end the shale supply glut. While in more recent times, his stance has shifted from bearish to considerably bullish, calling for a new commodity supercycle in late 2020, driven by underinvestment in supply. This guy's been around for a long time with Goldman Sachs, okay? And they've built up quite a reputation for him. Why do you think they do that? So that when he talks, people listen. That's why, all right? Would it be so difficult to hire somebody on who's, somewhat respectable and has a good character and is intellectual and give them the information? Since they're moving the markets, would it be so difficult to say, yeah, guess what? Oil is going to go up to $120 a barrel. So we want you to come up with some predictions saying it's going to come up to $120 a barrel. So that when it does, he looks like, a champ, right? And then they do this several times. And then later on, they can come back and say, oh, if you want to learn about Jeff Curry, he's called the Maverick. Let's use that word Maverick. Everybody's been watching Top Gun lately. Let's use the word Maverick so everybody likes this guy, right? Hey, right? So, I mean, I'm not saying that's exactly what's happening. I'm just saying it wouldn't be very difficult to create a situation like that, all right? I don't know if that's exactly the situation, obviously. I'm just saying, let's be critical about what's going on here. It wouldn't take that much to do that. All right? Okay. Why is this important? Why do you really, really want to know that this guy's so good at calling the commodities market? Why would you want to know that and believe that this guy's really, really a maverick when it comes to that? Because Goldman Sachs said gold was going to $2,500 as they were offloading their massive long position to you. So how are you ever going to believe anything they say again? So now they say, according to Goldman Sachs chief commodity strategist Jeff Curry, that is because Chinese consumers account for almost 1/3 of global retail gold purchases. Mr. Curry said, and a weaker yuan reduces their purchasing power. Okay? According to his research, the yuan has the largest impact on gold among major currencies. Okay, so where was this information before? Right? Where was this information before? When they made the $2,500 prediction, why didn't they talk about the yuan, having the largest impact on gold, and the fact that that's gonna create a slump in gold prices because of all the money being shifted to to U.S. Treasuries? Why? Where was that information? Why was it conveniently not mentioned then? Right? Well, because they needed to offload their long positions. So you see what's going on here, right? You see how the focus of attention was on one thing back then, but now it's, oh, well, excuses, 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 right? All right. So I just love this. Let me finish it. Hedge funds and other speculative investors who sought to protect their returns against inflation have pulled back bets on rising gold prices. Earlier this year, gold benefited from turmoil in financial markets as consumer prices surged and signs of geopolitical turbulence emerged in Europe. Now, this is the part I love. I love this. I had to highlight it in orange just so that it would stick out. Many investors favor gold during economic crisis because it can act as a shield against inflation, and asset managers expect gold and other safe haven assets to hold their value when markets turn sour. It hasn't worked out that way recently. it hasn't worked out that way recently. I wonder why. Why didn't it? Because it wasn't meant to. Okay? But now they're going to explain why it didn't work out that way recently. So they always make it seem like there's things that we couldn't have seen that took place recently that made it, change its course. So let's explain it. Okay? So it's like what I was saying 2 minutes ago in class. If you came to me and said, does the master candle in a demand zone, is it always red? I could just say a blanket yes. Okay? But if I just gave you a blanket yes, then you know you won't remember it. There, the, there's no logic. I'm not giving you the logic behind it, right? Then you see these articles, and it's like they come out with these reasons as to why gold didn't do what it was supposed to do. It's like they're telling you many investors favor gold during economic crisis. Okay, yeah, well, because you've told people to favor gold in times of crisis. Okay, that may have worked in the past when the markets weren't so highly manipulated and highly controlled. It may have worked. And over the longer period of time, yeah, gold has gone up in value. Okay. Well, has it really gone up, or is it costing more to buy it? You figure that out. So and recently it hasn't worked. Okay, well, now you're gonna go into explaining why it hasn't worked. But the thing is, there's no logic, real logic of why things are happening. When you understand the real logic of why things are happening, you understand very well, yeah, many investors favor gold, which you use to your benefit so that you could lure people into buying gold right when this war apparently began, just so perfectly timed when you wanted to offload your long positions. That's the logic. That's the true logic when you truly understand what's going on. But now they're going to give you a different logic, a different explanation, one that will never work again, likely never work again. Why? Because if you gain too much true logic from their explanations, then you would be able to predict the future. Do you think they want you to be able to predict the future of price action? The answer is no. So what they'll do is the logic that they try to explain will make sense temporarily for this scenario, but will likely not be able to be applied to future scenarios. Does that make sense to you guys? Do you understand that? All right, so let's continue. Look at this. Higher U.S. government bond yields, a byproduct of the Fed's rate increases, have supercharged a dollar rally. You see how I highlighted that in green? Have supercharged the dollar rally. So again, more bullish dollar talking here, words being used. Okay. It recuperated losses Friday and is still up nearly 10% this year. So don't worry about, any drops that have taken place. Don't be focusing on the drops. We don't want you to focus on that. We want to focus on how it recuperated losses on Friday. And it's up 10% this year. I mean, that's bullish. If you don't study the markets like we do and follow the markets like we do as closely as we do, you would never see the manipulation in the wording. You would never see how they direct attention to only making you believe what they want you to believe. It's just remarkable. It also makes gold more expensive for overseas buyers. See? Oh, okay. Well, where was that when price was at the highs back at the beginning of the year? Why didn't you tell us that? It makes gold more expensive for overseas buyers. And the yuan, it's becoming more expensive for them to buy gold, so they're going to shift their money into other assets. Where was that information, right? Anyone that thinks critically would read this article and say, well, why didn't you tell that to us last time? So, anyways, it also makes gold more expensive. Okay, so here is another point that I'd like to point out to you here. So now they come up with the explanations as to why gold didn't do what they said it was going to go do. Goldman previously expected gold to increase to 2,500 per troy ounce by the end of the year. That's right. Yeah, you said that. I was listening. In June, the Wall Street Investment Bank lowered its forecast to 2,300 per troy ounce. But Mr. Curry, watch this. But Mr. Curry maintains the precious metal will eventually move higher as concerns around slowing growth and recession mount going into 2023. Did you see that? Do you see that? But Mr. Curry maintains the precious metal will eventually move higher. Why? Why would it move higher after everything you just said? It'll move higher as concerns around slowing growth and recession mount into going into 2023. Really? That's your reason why? On one side of your mouth, that's what you say. On the other side of your mouth, you're also saying we had good jobs numbers, which is indicating to investors that the economy is not even close to going into a recession, right? Right, guys? You see what's going on here? They just say what they need to say but where's the logic in that? You think gold is going to go up because of, you think that there's going to be concerns for a recession. You just finished giving us the data on Friday, which made it look like everything was so great. Why? Because you need to support the raising of the interest rates that are going to be coming, the constant raising of the interest rates. That's why you made the consensus so low as opposed to the actual number, right? To make it look so super good, Meanwhile, people don't realize that the world was shut down for a long period of time. Businesses went out of business. Okay, a lot of jobs were done. They didn't exist because the businesses were closed. So when you open up the economy again and all these jobs become available, these numbers aren't that great. There's a big increase, yeah, but you went from like 0 to hero. So that's why that's why such a large number, because everything was closed. So I mean, you put that into perspective, and this is not great. This is not the reason. Shouldn't be a reason why interest rates should continue. There's a reason why they're increasing the rates, and it's not to do what they're telling us. At least that's my opinion. We believe the bullish gold case was merely delayed. We believe the bullish gold case was merely delayed rather than derailed, Mr. Curry said in a note to clients. Okay, so there you go. There you have it. Okay. What's your take on that? Anyone want to chime in? I want to know your perspective. Ian has your hand up. Do you have your mic, Ian?